So I think it's 4 o'clock in the afternoon, and I don't know if we should wait. What do you think about it?
Why don't we wait 3 minutes?
Yeah, let's wait.
So people can get connected.
So, ladies and gentlemen, we are waiting for other 2 minutes, and then we will start.
Sure.
So happy to welcome you. I will start. Happy to welcome you to the first webinar from IRELS. IRELS is the short version for International Real Estate Logistics Solutions. We are an international network of consultants for logistics in the real estate industry. We are founded in 2018 to support occupiers and owners for logistics real estate across national borders in logistics, property projects regarding to leasing, new construction and transactions. Partners in 12 countries are in France, Spain, United Kingdom, Poland, Germany, Czech Republic, Slovakia, Belgium, Switzerland, Romania, Austria and Netherlands. Would like to discuss about the effects of the corona pandemic on the European logistic real estate market, and the participants today are Renata Ozieka, managing partner from Axi Immo in Poland. Hello, Renata.
Morning. Hello.
And Laurent Sabatucci, president from AOL in France. Hello, Laurent.
Hello, Kuno. Thank you.
And Andrew Smith, partner of Partner Industrial National from Carter Jonas in UK. Hello, Andrew.
Hi, good afternoon, Kuno.
François Xavier Lancel is founder from Invertica in Spain. Hello, François.
Good afternoon. Good afternoon. Good afternoon, everybody.
And myself, I'm Kuno Neumeier, managing director from Logivest in Germany. So what is the status? What do we have today? The world has changed in the last weeks. Corona pandemic is keeping us all on edge and leads to significant changes in the markets. In Germany, all restaurants most of the retailers are closed, except food and drugstores. More people eat more. Increased demand for goods means increased demand for logistic spaces. Food retailers need additional space to meet increased demand and to ensure supply. Non-food retailers need logistics space for their stranded goods. Many productions had to be partially shut down due to missing components, and the 3PL providers need interim storage space. That's the situation here. Last week of March, Logivest received requests for more than 1 million square meter demand of logistics space in Germany. 50% were looking for managed warehouses, 50% self-managed solutions, and the crisis has driven the demand for logistics space exponentially. The challenge space with very short rental periods of only a few months. This is a challenge for us. The first quarter of in the leasing situation, the leasing level, no increase noticeable on the rental market yet. And we have something around 450,000 square meter space was taken up in the first quarter in the 8 largest German industrial logistic markets, which are Berlin, Düsseldorf, Frankfurt, Hamburg, Cologne, Leipzig, Munich, and Stuttgart. We have 13% less in the same quarter of 2019. Only a few large volume contracts we concluded, and that means space over 10,000 square meter accounted for only 36% of the total take-up. Top and average rents have not changed compared with the previous quarter, and currently experiencing a great solidarity on the part of the property owners. We have not seen anyone trying to make additional profits by asking for higher rents. The space with very short rental periods of only a few months, while landlords are usually very reluctant to do so, they are now willing to help during the current crisis. What is the situation in the Polish market, Renata?
Because the pandemic started in Poland later than in the west of Europe, the government responded early with strict measures. Production has not hit the brakes as much as in other countries. So all sectors of manufacturing are functioning with the exception of car factories, which are all closed. But Toyota and VW announced a gradual reopening. Similarly to the rest of Europe, Polish logistics is more resilient to new market conditions than other real estate sectors, thanks to the rapid growth of e-commerce. In Q1, we saw a modest decline in take-up at 5% year-to-year. Leasing transactions, which were at advanced stage, are going through, but fewer companies are seeking new space. It's wait-and-see situation. Sectors that are seeing strong growth are food retail and electronics. To lesser extent, also to accessories for children, books, household chemicals, and beauty products. Obviously, couriers continue to receive a high volume of orders, approximately 200% of increase. So in response, they have recruiting more staff. They also introduce weekend deliveries to the lockers. Now the whole logistics sector has benefited from new market conditions, not all. We can say it's more or less split in half. A number of companies are facing limited production, closed factories, supply chain disruptions. In addition, demand for certain goods has collapsed. But distributors and logistic companies will be under pressure to improve their e-commerce distribution channels to avoid backlogs that formed initially when online sales exploded. Moreover, those companies that were not present online rapidly try to develop e-commerce distribution channels to defend the market shares. And for example, chains such as Żabka, Biedronka, which are local brand names, Kaufland, are testing more home delivery services, while Stokrotka, Polo Market introduced click and collect shopping. We also observe higher demand for short-term leases. This is due to uncertainty and expectation that current situation is temporary, and the structure of consumer demand should normalize eventually. At national level, we expect vacancy will increase in short term, but in 6-8 months perspective, space availability will decrease due to the lower number of new projects. At the end of Q1 2020, vacancy has increased by 5%. And it's due to the fact that 50% of development in 2019 was started on the spec basis and are to deliver into the market in Q1 and in Q2. Construction activity continues, so there are no suspensions, and we don't expect or see significant delays in completions. Although in general there is a pressure from tenant side on the rent reductions. Headline remains stable at level 3.5 to 3.6 euro per square meter per month in main logistics locations. And for small business units or last mile investment, except Warsaw, the rents are at 3.7, 3.8 euro per square meter per month. Effective rents, this is the whole package, including incentive for the tenants. It depends on the situation in particular region and also individual circumstances faced by the tenants. So specifically those clients who lost part of the business, they put a lot of pressure on the rent reduction. But effective rents are at the same level as they were before COVID. So I would say that's a general overview of leasing market currently in Poland. And maybe I'll pass the voice to Andy. Andy, how the situation looks like in UK now?
Hi, Renata, thanks. So the UK, a bit like Poland, locked down later as well than other European countries. So we've been in lockdown since the 23rd of March, and this has obviously had a huge impact on retail, with only those outlets that are deemed essential to be open, including supermarkets and other food shops and banks, petrol stations, etc. So consumer spending has been not only affected by the physical lockdown, but there's also been a huge fall in confidence. The GfK Consumer Confidence Index plunged to -34 at the end of March, compared to -7 in February. And I mean, this has been mildly negative since the Brexit referendum. So we've this is just taking it to another level, unfortunately, now, and I suspect to be record lows this month. We've had 140,000 firms basically applying for the government's employee furloughing scheme, obviously suspending employees, but being paid up to 80% of the employees' cost, up to 2,500 a month. That's now been extended through to June. The Resolution Foundation estimates that basically nearly 10 million employees will eventually be furloughed. So quite dramatic, and this is also having an impact on people's disposable income, together with some redundancies. So several high street retailers we've already seen fall into administration, some big household names, Debenhams and Cathkidston, etc. And there will be others, unfortunately, that would reopen. The UK's official forecasting body is basically expecting contraction GDP by 35% in Q2, falling probably by about 13% for the whole of the year. So this is going to take our economy back to essentially about 2007 levels. And even the crash was only about -6 or 7. So much like others, online retailing has been the clear winner out of this. We've found ourselves in virtual queues for any online groceries for up to 2, 3, 4 hours. UK was already ahead, I guess, in terms of Europe into online retailing being around about 19-20%. That's probably just accelerated up to 30% or so this month. That trend I can see being accelerated. Many of the supermarkets have taken back space that they were marketing. Tesco's took back 1 million square feet of space that they had marketed and temporarily reoccupied. I mean, we had something like £1 billion worth of additional groceries being ordered in a 3-week period. So there's been some additional activity in terms of temporary retailers. There's about 5 million square feet of space, including Aldi and Lidl having quite a bulk of that. But whether it's genuinely come out of this immediately, or it's just already expansion plans that have just been accelerated, we're already seeing a little bit of a slowing of take up already with basic Q1 quarter. We saw about 7.1 million square feet of industrial space across the whole market, of which probably logistics is about probably just under 2/3 of that, so maybe about 4.5–5 million, compared to Q4 2019 of about 13.6 million, and Q1, if you took the same period last year, was over 16 million. So in terms of leasing activity, we're already in a little bit of a slowing down, and unfortunately it slowed down a bit further. Laurent, how's things in France?
Thank you, Andrew. In France, it's not easy. What can we say? First, like in other countries, the COVID showed us that logistics property are certainly the most resilient real estate asset. We can close shops in France. Everything is closed, shops, offices, and a lot of factories. But we need warehouses and transportation to be able to deliver essential goods. And for the first time, the economic players and the authorities consider logistics as strategic. Usually in France, few people are interested by logistics. But the real estate French market is strongly impacted by the lockdown in terms of take-up, vacancy rates, and rent. It's almost impossible to visit new buildings and to sign lease contracts, so it's very, very difficult. We have only signed some short-term contracts to help logistics providers to store goods usually sold in shops. In terms of take-up, we have a very strong drop. The Q1 2020 was around 360,000 square meters. It's 60% lower than in the 2019 for the same period. So it's very, very, very strong. For 80% of the take-up this year relates small warehouses between 10 and 20,000 square meters. It's very significant. We have no big deals in logistics in this period. It's obviously the worst result over the last 10 years, so it's quite hard. Logistics providers were the most active occupier in the first quarter, accounting more than 50% of the total take-up. This trend should accelerate over the year. It's really difficult to forecast, but we know that the take-up is directly linked to the GDP, and the French GDP should decrease around 8% this year. So we expect a strong decrease in the take-up. To compare with the 2008 crisis, the GDP fell by 3% and the take-up fell by 35%. This time we think that the restart could be faster at the end of the year, and we expect a drop in the take-up around 40%. With this drop, the vacancy rate should increase, particularly in the north of France, near Lille, where it was already increasing before the pandemic crisis, around 11%. Along with this vacancy rate increase, rent levels may drop, but only a little. Indeed, in France, rent levels are very low, close to the 2006 levels. It wasn't a good news for investors, but now it could be good news. And the vacancy rates are low near Paris, around 7%, and very low near Marseille and Lyon, below 3%. The average rent in France is around 50 euros per square meter near Paris, Lyon, and Marseille, and around 45 euros per square meter in the other regions. This is a global overview in France, but it's not an easy period for us. And I give the word to François-Xavier.
Thank you, Laurent. Well, in Spain, the situation is not much better. As you know, Spain has been strongly hit by the situation where the lockdown started on the 12th of March, and since then businesses are closed, industries are closed, and well, actually, the government decided to open again the activity last week in non-essential businesses. In the Spanish industry, as is quite strong in automotive and textile industry, which have been one of the most affected sectors. Automotive is completely stopped. Just to give an example, SEAT in 5 weeks has stopped producing 55,000 cars, which you multiply that by 9 automotive producer is quite a great loss for the economy. Textile industry is about to 15 to 20% of its capacity. Other retailers like cosmetics, perfume, DIY are between 20 to 40% of their capacity. Even though some peaks have noted in some activities like sports, for instance, at the beginning, but rapidly the stocks went out. These sectors to cut costs have been recurring to government schemes, redundancy schemes, which allow the companies to save 70% of the wages of the employees, and the companies assume 30% of the rest of it. They have put lines of credit, government lines of credit for small businesses and self-employed, called ICO. But it's been a hard time for these sectors. Other sectors, less affected sectors like food and pharma industry have been booming, like in other countries, with a very strong increase in the first 2 weeks in the food industry, which has led to now the online deliveries are not made in Spain since food producers have been overwhelmed. Tech retailers have been also functioning over 100% of their capacity. Well, this situation gives, in terms of market situation, we've had quite a decent first quarter. Let's say that the situation is not reflected in the numbers of the market. 300,000 square meters were let more or less in all Spain, 80% in Barcelona and Madrid, which is about, to compare, 1.5 million last year, a drop of 20% of the take-up, which is not substantial. The few contracts that were signed were mostly short contracts or contracts in the final decision process. The other companies have frozen their decision process. Payments in Spain have not been affected yet, and we think that depending on the sub-market, they might not be affected or slightly affected. 5.5 euros per square meter in Madrid, 7 euros in Barcelona. All the tenants in the most affected sectors have been negotiating with their landlord, institutional landlords, obviously, with more or less luck, but it's been in most of the case in longer length and forgiveness of rents or postponement of rent. We expect delays in the construction process since town halls, technical are not operational. Protocol of security will affect work in the industry. So we think that we will suffer delays in construction. This is about the situation in Spain.
Okay, so to sum up leasing activity in logistics in major European market, we can pick up some similar trends. High activity of food retailers, e-commerce operators, requirement for flexible solutions, and slowdown in production. I mean, one thing which is positive and repeated by everyone in this part is that the logistics sector keeps resilient across Europe. So that's positive. Kuno, let me ask you to move forward to the next topic, which is investment in logistics sector. Can you describe the situation in German market?
Yep, thank you. So, well, the investment market, we have in the first quarter a record quarter in the German investment market. Transaction volume was about 2 billion in Germany. The two largest transactions in the first quarter of 2020 were German stakes into international portfolio acquisitions. Union Investment acquired Gabes Logistral portfolio, and Ares Management sold its share in a pan-European logistic portfolio with a total of 40 properties and 1 million square meter of space to its co-investment partner, Investec Property Fund. The industrial and logistic market, the market share of around 11% we reached of the commercial property market, and the logistic asset class has the third place among the most important asset classes in Germany. So one is office, and second place is retail industry in the German market. So logistics real estate will continue to be an extremely attractive asset class. Slump on the investment market, but much smaller and shorter than in other asset classes. So the market research among the investors in Germany, so Logivest did the last 2 weeks an intensive research with all potential logistic real estate property buyers, and 78% want to maintain their current investment behavior. So 6% said even want to expand it, and only 16% stop shopping. So only 12% plan to sell logistic properties. So hopefully it becomes more that someone want to sell it, but that situation is after our research, what we did the last 2 weeks. And how does the investment market look like in Poland, Renata?
Thank you, Kuno. In the first quarter of 2020, it was also a record quarter for Polish logistics. Transaction volumes reached 1.46 billion euro. And also we witnessed large portfolio deals. The largest portfolio transaction was the takeover of all of Goodman's CEE asset by GLP Group. This Singaporean investor acquired 21 logistic parks only in Poland, as well assets in Czechia and Hungary and Slovakia. That was for 1 billion euro. Clearly, investment demand for Polish logistic real estate from Asian investor has been very strong, and investors entered in 2020 with a high level of optimism and appetite. So this pandemic situation is cooling down this optimism as it leaves the marks on the economy and also on the tenant situations, which is the key key asset in the real estate today. But overall, logistics is better placed. Investment in logistics is better placed than any other asset class to weather the current storm due to the rapidly growing e-commerce, online shopping, and that creates demand for real estate such as mile logistic and also large regional and international distribution hubs. Valuations were broadly unchanged in logistic investment at the end of Q1. Valuers merely inserted a clause about heightened market risks, and we expect that the yield for prime logistic will remain the same, as it seems to be safe bet for investors. Transactions that were at advanced stage before the pandemic are going ahead, but to proceed with new opportunities is difficult, first of all due to the restriction of traveling, and but we expect that after the short-term pause we should come back to the let's say normal situation and trading. So our expectation is that pricing for prime logistic real estate should remain stable due to the resilience to the new market conditions, but also we expect, on the other hand, that this current situation might result in price correction to non-core assets, which were typically projects for private equity and value-add investors. So as we had also interviewed our clients, logistic investors, and majority of them, they said that yes, they would go for core prime assets, when depending on the tenant situation, they would consider non-core assets as not the most attractive these days. So this is a general overview for investment market in logistics in Poland. Andy, how does it look in UK?
Thanks, Renata. So in the UK, we were just getting things sort of some momentum going again. You remember, it seems so many years, it seems years ago now, but we had this frustration with not having a majority government. So we finally had a majority government come in the end of December, and everyone thought, wow, great, lots of momentum, we get some confidence and decisiveness. And of course, things were just getting going when finally this thing has obviously hit, and there's obviously been some fairly mixed responses in the market. There has been equally deals obviously aborting, but also still transactions following through. So there was a big portfolio in West London, about 200 million that was withdrawn. But there's been one or two sort of single well-let assets still doing quite well. So I still think we're reasonably well positioned. I was looking at some stats when we looked at the global financial crisis. If we go back 9, 10, 11 years ago, the MSCI monthly index on average equivalent yields basically moved down from a high of 10.2% at the height of the global financial crisis down to 5.5% in March of this year. So incredible 470 basis points. And in contrast, the all property index only moved down by 320 points. It's interesting that industrials moved from being the highest yielding to now being the lowest yielding out of the three main sectors. So during this sort of 12 years or so, we've seen a transformation of the investment sector, and I think that will still be obviously our key sort of robustness, hopefully going through this. So prior to this, we were looking at yields between sort of 4.7 to 5.5%, and even down to 3.5% in some prime West London parks. And you know what that means at the moment, I suspect, is there's obviously going to be some correction on that when we have investors basically sitting and waiting and seeing what is going to happen. But I'm already hearing of some investors that are basically pushing their reversionary yields by at least half a point. So, but there is obviously some margin when you've got average London yields of 4%. There's still, you know, they also are quite high. So the sector's obviously resilient occupier market combined with its attractiveness of the UK market to global investors, I think will ensure that industrial investment still remains quite robust. There's obviously, in times like this, investors generally go to a flight to quality, and you know, on their tick list of key requirements, I guess it will get more focused in terms of it's not just the building quality, it's the covenant, it's the location, and whereas, you know, and making sure that you tick it, you know, the 5 key points very well to probably still get those prime yields. And London and South East already were the most attractive, and because of their vacancy levels being relatively low, even with an increase in vacancy, they're probably quite well positioned against some of the other markets in the UK. In terms of just industrial transactions, I was saying we were getting momentum back up. So we still managed to turn over 1.3 billion of transactions in Q1 compared to about 1.9 billion in Q1 last year. So it's off, and it's probably the Q1 figure is about the lowest since 2015. So that's kind of where we are. Laurent, how's things from an investment point of view in France?
Thank you, Andrew. The same situation, I think, like in other country. Last year was historical in terms of investment in France, around 4.7 billion invested in prime, and prime yield were below 4.5 at the end of the year. And the first quarter has been dynamic with more than 1.3 billion invested in France, due mainly to the final signature of 2 major portfolios, but it's quite dynamic. However, we should register a strong decrease in the second quarter, partly due to the postponement of due diligence and decisions. Besides, most sellers have stopped their sale process and ongoing negotiations are frozen. And like in other countries, investors are now in a waiting position and try to estimate the impact of the crisis on vacancy rates and prime rents. So we are waiting. We don't really know what the consequences of the outbreak for the capital market will be, but we expect limited repricing in Paris, Lyon, Marseille, where vacancy rates were very low, around 50 bps, I think. So the prime yield could stay around 5. We also think that speculative projects should disappear next year. It will be very difficult to have speculative projects in logistics, I think, in France. But the situation is not so hard. We are waiting, and a lot of investors confirm that they want to invest in logistics. We think also that prime logistics asset could become a safe haven for investors. If we compare the situation to the 2008 crisis, in 2008, only logistics specialized investors participated in the recovery. And this time we believe that all real estate investors will invest in logistics and participate in the recovery. It's very important. So the situation is not too bad until now. This is the global situation in France, and now François-Xavier.
Let's say that the investment market has been very active last year. Is online last year, 1.6 billion euros was sold in Spain. On Q1 this year, we are about 380 million. Nothing to compare with England or Germany or France, but a good year or a good start of year for Spain. Prime yields are around 5%, with some lower reference on specific assets, very prime location or portfolios like Amazon. Q1 2020, we've seen core and core plus deals, sorry, have gone through due diligence and value add and speculative development. Investors have asked for an extension of the exclusivity period and have delayed their decision. Expectation for the logistics sectors are rather good compared to other sectors like retail and hotel, and we expect a reallocation of money on logistics to support our when times come. The length of the crisis, I think, will determine how capital values will be affected. Logistic assets will probably be the most resilient sector. We obviously will see tension for land buyers and pure players, tension on price of land, and pure players will be able to purchase again land, but in the short term we don't see any developments. Financial market should remain very volatile, so we expect this is a good factor to ensure that we don't see that this distressed market could occur this year, because usually it takes time to see distressed operation, and sellers are in a much better position in this crisis than they were years ago in this crisis. Banks have used much lower, so we expect in terms of yields, we don't expect a readjustment in yields in prime areas and like Barcelona, where land is very scarce and vacancy is low. In core and core plus buildings, we might see some tension for value add and spec value add yields in some markets where the supply is being important, like in some places in Madrid, but we don't see that the increase should be very much higher than 25 to 75 basis points. This is about Spain. Renata, sorry.
Thank you, Francois. To sum up this part, we can agree that the investors behave with less or more confidence in different markets. Some positions are wait and see, some show more confidence, some are more selective, but in general, logistic market is in the first choice of the investors. And to sum up the first quarter, I think we all had the best ever results. So let's hope it will come back. Kuno, what is the forecast for German logistic market in coming months, in your opinion? How would you see what's going to happen?
Here is my glass ball, yeah. And you can see how it becomes. So now the medium and long-term effects depend on many factors that are still unknown. unclear how the German economy will develop. Yeah, this is very open in these days. The manufacturing parts, the OEMs did not open yet. And this is a very open issue, what we have to see. And the demand for logistics space could increase significantly when the companies want to make themselves, their supply chains, less dependent on third parties. It means increased storage, so probably increasing importance for the e-commerce. These are the major points at these days, and we have to wait mainly what becomes in the next 2 days from the operational side. The forecast for the letting, I think we have a very optimistic situation that the logistic properties are used very well in the moment, in the future. And from the investment side, we are very stable asset class, and so the market confirms to me that it's becomes at this moment very positive. So thank you. What are the forecasts in Poland, Renata?
So this is time for my crystal ball. The Polish economy has a number of factors that are advantages in the current situation. It is a diversified but closed economy, small tourism sector. We are net energy importance, flexible exchange rate and the current account balance. So also government support program might be helpful for selected companies to rise from this difficult situation. Logistics is expected to enjoy the most resilient occupier demand of all commercial sectors. In total, take-up is stable, however, expected to fall in short term. Headline rents should be stable, and there will be limited downward pressure on effective rates in the next quarter. But overall, we expect this logistic asset class is very stable and has solid fundamentals. We expect that the pandemic will cause also the deglobalization of supply chains. This will be a rather long-term opportunity for Poland. The country is already important near-shoring location within Europe. So it is integrated into European supply chains and continents, transport networks, trade market, and also competitive wages. Also, we expect more caution among investors and practical issues such as restrictions on inspecting properties, traveling abroad will cause slowdown in investment. But prime assets still will be the focus of the investors, and we don't afraid about that. And they will be more selective simply and picking the best projects. So that's kind of my crystal ball. How is yours, Andy, in UK?
Thanks, Renata. Yeah, I guess the only thing we know is we don't know at the moment exactly where it's all going to be. There's obviously short-term management of this situation in terms of UK's still need to decelerate the spread of the virus. The speed in which the life sciences sector produce some sort of vaccine, and then of course what of all these government interventions, fiscal, monetary policies are they going to have the positive or the alleviating impact they're hoping for. And then, of course, you know, the strategy for lockdown, we don't know when this lockdown's going to end yet. We hope in 2 to 3 weeks, but we don't have confidence yet on that. And of course, consumer confidence, when's that going to return? You know, we like to, you know, go to pubs and things like that in the UK, and you know, that we need some confidence back that when we can do that and wine and dine and get back to restaurants and sporting events and all those sort of things. So until we know that, But I mean, short term, I mean, there's positive realism here. We've got pain, you know. There is going to be, the landlords will try and maintain the rental levels, but the reality is rent frees are going to have to be extended, and other incentives. You know, we have a situation with, you know, businesses that unfortunately won't come back, and so vacancies are going to arise in certainly some areas. So when someone has choice, then there are certain landlords that will have to potentially offer more incentives. So short term, 3, 6, 9, 12 months, we're going to see some pain. I have no doubt about that from a leasing point of view, and probably from a capital markets point of view. But, you know, medium term, you know, this is just, you know, has put us all into a situation where we're doing things like this. We're doing more things online, and we're ordering more things online. So it's just a massive catalyst to helping logistics, I think. And also our sector, remember, is some of these big assets are all owned by large companies that are reasonably secure in a lot of those instances. We still have continued population growth in the UK, increase of over 3 million, and we're ever going to demand more, I think, online. So medium term, I think we're well placed, particularly, you know, assets that are in urban locations. You know, we already have a dire lack of supply for urban delivery. So I can see that being maintained, but short term is going to be a little bit of pain, I can imagine. So how things do you see in France, Laurent?
Thank you, Andrew. It's not easy to forecast. We know that short-term consequences could be strong in terms of technical and vacancy rate, but over the medium term, we anticipate positive trends, like you, particularly from 2021. The first point, we think that inventory levels inside warehouses could increase a lot. Our customer explained us that they need more inventory to be less vulnerable, and we expect a new demand in logistics linked to this key factor. The second point, the crisis accelerator of logistics trends, and we expect a strong and fast e-commerce growth for many sectors. Indeed, millions of consumers have become more accustomed to online shopping, and I think it could be a good thing for the logistics market. We expect a growing demand for new e-commerce projects driven by traditional retailers. And in France, I don't know if it's the same thing in Europe, but in France, we think that e-commerce supplies require 3 times more space than traditional retail supply chains to generate the same turnover. 3 times more space. So it's a very positive trend to understand the logistics market. The last point, to be more resilient, we think that warehouses will be more automated with more processes, more devices to mitigate human health risk. And if customer invest large amounts in new warehouses, I think it's obviously a positive news for logistics assets. To conclude our vision, we expect a challenging year, but we see light at the end of the tunnel. We can say that, I think. Thank you. And François Xavier, sorry, François Xavier, what about Spain?
No, well, Spain is very much like the situation you described in France. We also have provision of GDP, loss of GDP about 7.5 to 8%, which will probably create a high level of unemployment, and we'll see whether the short-term measures of unemployment will be followed by real unemployment, and whether we come back to we know the previous crisis. Hopefully not. Tourism is a sector, a strong sector in Spain that will create unemployment, obviously, and that will affect consumer spending. Therefore, in some way, the logistic real estate market in general. So we'll have a difficult second semester, and to see vacancy especially in the second and third weeks. Nonetheless, the possible drivers to temper the downturn for the industrial logistics market in Spain, the vacancy rate is rather low, especially in first phase. So this will help. We think we will see also in some sectors like food, pharmacy, increasing inventory. In some other sectors, we will see like textiles, where shortened are needed, where more automation is needed. A more complex chain, and this will probably go in the sense of nearshoring fabrics that were sent to China 10 years ago. But our best hope in Spain is the penetration rate of e-commerce. We're about 5%, way far away from northern and western European standards. So that's something that will boost by COVID, after COVID, we think, and that can't be stopped really. And this will translate in more space needed for warehouses. So on the short term, as you all said, we see some difficulties, but at the beginning of 2021, when more or less all sectors will are due to have recovered, if we don't know another pandemic, we should come back to some growth in our sector. That's our analysis.
Our time limits us now, so as we received some questions in this session, we'll probably respond to them in separate conversations, either via email or direct conversations. So, Kuno, would you like to wrap up the session?
Yeah. Okay. Thank you very much from everybody. Thank everybody from the participants which and joined the first webinar from IRELS. The question is, give us a feedback, please, if it's interesting for you to do this regularly. We are very open to this, and would be nice to get the feedback from your side. I will thank you, everybody, and we will send you further information if there are needed. So thank you very much to everybody.
Thank you.
Have a good
Thank
day.
you.
Bye-bye.
Thank you. Stay safe. Bye-bye.
Bye.
Thank you very much.